Hey everybody, good afternoon and welcome to our weekly lesson. This is Sami Abu Saad with T3 Live. Hope you're doing well. Hope your week is off to a good start. I am here joined by members of the Strategic Day Trader Room. We just finished our lesson and for the week, our coaching session for the week, and we are gonna do the lesson. So with that said, we're gonna go ahead and get started. Last week we talked about how to scan for intraday charts, and this week we're gonna talk about how to scan for daily charts. So let's do that. In order to scan for daily charts, for swing trades, I use a program called TC2000. You can use your own platform. You don't have to use TC2000. The good thing about TC2000 is it allows me to zip through the list really quickly. It takes almost no time at all to go between from symbol to another, right? Really quickly, like so. It updates immediately, whereas most other platforms take a long time. Look at this. I can go as fast as I want. Once you get good at this and you know exactly what you're looking for, I mean, I scan 3 per second. I look at probably 3 symbols per second. But before I get started here, I need to share with you a standard required disclaimer to let you know that trading is risky and that whatever we discuss today is for educational purposes only. All right? So with that out of the way, let's switch back to the daily chart and look at TC2000. I know some of you use the free stockcharts.com or something like this. And it's good. You can, it's free, but it only allows you, I think, to scan the S&P 500. It doesn't really allow you to scan the entire stock universe. Okay. So what I do is here's what I do from scratch. First, I go to watch lists. When you're setting it up the first time, in the upper left corner, this costs $30 per month, so it's almost free. So I highly recommend it as a program for scanning for swing trades. Swing or long-term trades. I go to watch list. You can also do it from the easy scan button, but easier to do it from watch list. Go to watch list, go to US stocks, and then add the criteria. Click on scan and select the conditions. The conditions are very simple for me, are just volume and that's it. What else? Volume and price. Volume. And I just go volume, and then I want volume to be whatever you want. For me, 500,000 shares is enough per day on average. Okay, so that's 500,000. I add that, and then another condition is I don't mind it, but I prefer not to get a bunch of penny stocks. So I like to limit it to $1 or above. For day trading, I like to limit it to about probably $15 and above only, because I need movement. But for swing trading, the $1, $2 stocks, they move like crazy, so I don't mind it. And then I hit scan, and now I get my list. Basically, there's 1,400 symbols, and I sort it by volume. Okay, and then if you click on this button here at the top, the arrows, right? You can select which way you want it to go, which place you want it to go, to the left, right side of the chart. I usually put it on the left side of the chart. It's already here, as you can see. So I just showed you how I scan, basically, how I set up my watch list, how I find my watches. Under US common stocks, there used to be tons of ADRs listed under US common stocks. I had an email correspondence back and forth with TC2000 long time ago, asked them to remove the ADRs, and 3 months later they said it's done. So I was blown away. I was like, wow, this is like the first company that actually listens to customer feedback. And so now it's just basically US common stocks. And then the reason why I'm doing this lesson today is because in the last 3 lessons, we talked about the main patterns, which are, let me just remind you, the main trading patterns to scan for, to look for when you're trading. First, we talked about the buy set, the breakout, base breakout, right? And then the second pattern would be the pullback. This, for example, was a pullback to the rising 20 MA. And those are the two moving averages that I use, the 20 and the 200, both simple. That's the 20, and the red one is the 200 MA. Now, why are these the two main trading patterns? You don't need to believe me. But why are they? You don't need to believe anything anybody says, unless it makes sense. Why are these the two main trading patterns out there? Well, the reason is stocks correct either through time by going sideways or through price by pulling back. Show me something else that's not a pullback or a breakout. For example, I'll just give you an example here. This was a breakout. That's another breakout. This was a pullback that initially failed and then worked. Does that make sense? Every single pattern that I can show you is either a pullback or a breakout. Pullback, right? There was no pattern here, but you can say it was a correction through price by pulling back. So this was also a pullback. This was a pullback. Does that make sense? So it's either a pullback or a breakout. There is one other pattern, which is, anybody know what it is? From the room here, or feel free to participate if you're on social media. Also, if you're on social media, I just want to let you know before we continue while I wait for the answers from my room members. I just want to let you know to check the links in the description of the video. If you like what you see, you can join me for the next 30 days for $49. Okay? If you've never been a part of the room, which was voted the best trading room in the nation. Okay, the third pattern, you guys are right. Climactics. When a stock just falls out of the sky. When it goes climactic, that's the third way stocks correct. And that you look for as well. But how often do I find a really good playable climactic? It's rare. It's rare. At the beginning of the year, there were a bunch that we played long climactic buy setups. So, because the market was going climactic. So from time to time, though the climactic pattern shows up, but for the most part it's either a base breakout or a pullback. You might say, well, what about this W pattern? Well, that's a pullback. That's the pattern that I called on Bitcoin a couple of weeks ago, which worked beautifully. That's a W pattern. What about a 1, 2, 3 breakout? That's a breakout pattern. It's a continuation pattern. So any and every pattern you can think of. Head and shoulders. What's a head and shoulders pattern? Oops, I need to redraw this. What's a head and shoulders pattern? It's a pullback, but with a breakdown failure. That's a breakdown failure, and then a pullback, and then it goes higher. That's an inverted head and shoulders. What about, you name it, whatever it is. It's either a pullback or a base breakout, but with some variations. For example, the W pattern comes in 3 different forms, not just one, right? I just drew one, but there's actually 3 different ways you get the W pattern. But mostly, again, it's the same thing. Okay, now, so that's the first thing to know. The second thing is, when it comes to swing trading, the daily chart is your main time frame, okay? For swing trading, long-term trading, weekly and monthly, depending on how long term we're talking about. So at the end of the week, you're supposed to scan your weekly time frame, because every week, at the end of the week, a new bar finishes forming. So you can get new setups, okay? At the end of the month, you're supposed to scan your entire stock universe on the monthly time frame. But not every day, just at the end of the month. So it's 12 times a year. That's it. The weekly, every week at the end of the week. If the market didn't go anywhere, you don't have to do it. The swing trading, that's the daily time frame. That's the main time frame. For swing trading, the daily is the time frame of focus, but the hourly is actually where I finesse or I look to perfect my entry. Because oftentimes with the daily, you look to play, let's say, long here, stop here. It's a big stop. The bigger the stop, the smaller the share size, and the smaller the reward to risk. Let's say you get out here, you think, whoa, I made from 29 to 33, $34. That's a lot of money. No, it wasn't, because your stop, if you played it here with a stop right here, was too big. So you always have to think in terms, when it comes to the reward, You always have to think in terms of reward to risk. How much did I risk in order to make? In this case, let's just say this is a hypothetical question, a hypothetical trade I didn't do it. If I risked $2 or $2.50 to make to make $2, was that a good trade? Probably not. Generally, I look to make 2 to 1 minimum. In the last 100 trades, we just did a coaching session for the Strategic Swing Trader members yesterday. We went over the last 100 trades that we took in the Strategic Swing Trader newsletter, and the R to R, the reward to risk, realized, this is realized, was 3.0. That's phenomenal. 3.0 is phenomenal when it comes to reward to risk. All right? So 2 to 1 is what I look for as a minimum, because oftentimes you know your target is 2 to 1 and it doesn't get to 2 to 1. Does that make sense? You get 1 to 1 or 1.5 to 1. So that's why minimum 2 to 1. And if you get more, great. So when you end up with realized 3 to 1, it means you did a marvelous job managing, or you got lucky. For example, I'll show you. NLS. Look at this. Managing it bar by bar. I was lucky. It never trailed. It just kept on dropping. I was in the Kirk. It trailed out today. I'm not a genius, but bar by bar. Down, and then, okay, out today. No problem. But I was in it from July 1st. This is July 1st. Okay? With a tight stop right here, entry right here. Beautiful. So sometimes you can get lucky. TUFN. I'm in it, managing bar by bar. Check it out. It's not trailing. Great. Does that make sense? So sometimes you just get lucky in that the setups just keep, the play keeps on going and it doesn't trail you out, and you end up making a lot more than expected. I passed on the XON. What a mistake. I mean, I passed on it because the reward to risk was 1.2 to 1. Entry was right here, stop was right here. And target was at $6, I think. So at the most, I was expecting $6. Okay. At any rate, it was 1.2 to 1. Okay, in total. And I didn't do it. But look, 1.2 to 1. That's not good enough. But look what it did. So if I had done it, it means I would have actually gotten lucky, because it just kept on going. But the reason why I'm bringing this up is to tell you that also picture perfect stuff, which this was a picture perfect setup, transition A on the daily chart. Check it out what the market was doing also while this was basing at the highs. May 31st, the market was collapsing. Look at this. This is June. Market was dropping. This is May 31st. Let me just show you. This is May 31st right here, this day. Market was dropping like crazy, and XON was basing at the top of the base with a nice curling 20 MA. So I should have taken it, even though it had lower than normal reward to risk, because that was a picture perfect trade. Worked marvelously. I didn't do it. So okay, we've talked about a few things. Now we're gonna really talk about the most important thing, which is when it comes to swing trading, you have to know this picture inside out. I've talked about it a lot in the past, and many of you know what I'm talking about here. I call this the atom, the basic unit in which all stocks move, right? And so here, this was what's the name of the play here? It was transition A. So that's when the stock is dormant and then finally breaks out, transitions to, so this is called transition A, transitions to a stage 2 uptrend. When it's in a stage 2 uptrend, like let's say AMD is in a nice stage 2 uptrend, you can look to play the pullbacks and you can look to play the breakouts. So I do the transition A when the stock is just transitioning. When the stock is in an all-out uptrend, I do the pullbacks and the breakouts, depending on how the stock sets up. Depending on how it sets up. And then stage 3, this is stage 3, the top, I don't do anything with it. And I don't do anything with stage 1. This is B. If the stock goes climactic, then I do that short, right? So here I do the pullbacks and the breakouts in stage 2, right? And then on the other side of the atom, or the basic unit, it's the opposite. I do transition C, the breakdown right here. And then during the stage 4 sell-off, I do the sell setups and the breakdowns. And then right here at the bottom is if the stock goes climactic, I look to play it long for a dead cat bounce. And then once it starts to base again, then I don't do anything with it. So that's where 5 of my 7 strategies come from. But there are more other strategies that would be outside of the context of today's lesson. I mean, it would be way too much information for you. Okay, so we've covered a few things. Now on to the scanning part. I have 1,400 stocks to look at. I can probably get the list done in under 45 minutes for sure. Okay, because I can go 3 per second. And when it's good, I just flag it. Shift and F, flags. And I just keep going. If it's not good, I keep going. I see something good, I flag it. And I keep going. Flag. Let's just say flag. Flag. Okay? And then I sort by the flag. And then I have my list. Once I have my list, the flagged items, then I look at it on multiple time frames. Multiple time frames means for a swing trader, the daily is the primary time frame, the hourly for entry, the weekly and the monthly to make sure it's not in conflict with the weekly and the monthly. And if the weekly and the monthly look good also, so much the better. It means it's more of a long-term play than a swing play. Does that make sense? Alright, I'm unflagging these. Shift and F unflags them. And I sort by volume. Okay? Because when I start scanning, because I want to cover the most liquid stocks first. What if I don't finish the entire stock universe? This is called my stock universe. 1,400 symbols. What if I don't have time to finish the whole thing? Then at least I covered the most liquid stocks. So I sort it by volume, and then I start scanning. What am I looking for? I already told you what I'm looking for. I'm looking for the basic unit setups. So transition A, B, C, and D. And then breakouts, pullbacks, 1, 2, 3 patterns. But mostly I'm looking for either pullbacks or breakouts. Does that make sense? A transition A is a breakout, right? A transition B or D means climactics. And in order not to spend too much time per symbol, what I do is I focus here. If there's nothing going on in the last day or two, if there's no setup right here at the right hard edge of the chart, then I don't waste my time admiring and looking at past setups. Oh my God, this was such a nice breakout. This was a nice pullback. Okay, but it's gone. If you're gonna waste 5 minutes looking at every chart, analyzing other past patterns, right? Then you're never gonna finish. So in order to really go fast, I focus on here. Is there a pattern setting up right now? If there isn't, then I don't waste my time. And if there is, then I can analyze it and admire it and say, wow, this is beautiful. Let me flag it. Let me give it a kiss. Okay. Then you can admire it and waste your time on it. But don't waste your time on the play on any chart unless there is a setup currently happening. Okay? So something like the AMD, again, just ask yourself this. Is it a base breakout? Is it setting up as a base or as a pullback? If the answer is no, then move on. And the answer is no. Now, keep in mind the correct entry, just like in day trading, like I shared with you last week, like I went over last week. The correct entry needs to be at or near the rising 20. Unless it's a counter trend trade. When you're playing climactics, you're playing counter trend. Then it needs to be as far away from the 20 as possible. But if it's a swing trade, it needs to be, if you're with the trend, you need to find the correct entry is usually right here. If it's far from it, then you don't have a setup. Does that make sense? And then we want the 20 to be coming from the left side of the chart to the upper right side of the chart. Okay? We don't like the ones that have a meandering flat 20 MA. We like the ones with momentum, with energy. If it's bullish, we like it to be above the 200 MA also. Okay? What else? We like to have a void, room to move up. Or no resistance at all. You look to the left, there's nothing. No resistance. We want to see energy, momentum, not red, green, red, small bars, not moving. No, we want to see momentum. We want the stock to be moving. Those are the kind of plays that I look for. So we can do some scanning together. Of course, that would take a long time to do with you, with us, with me on the mic. But I already did some scanning just after the close for like 15 minutes, and I'll show you slightly more, 20 minutes, and I'll show you what I found. But for example, CHK. Do you guys see anything on the CHK that's interesting? What's the name of the pattern that's setting up? Let me ask you. Let's keep it simple. What's the name of the pattern that's setting up on CHK? What's the name of the pattern? Come on, quickly. Yeah, breakdown. Is it any good? And the answer is no, it's no good. Why? Flat 20. We need a declining 20. If it's a flat 20, it's no good. This is a pullback, BAC. It's actually reporting earnings, I think tomorrow before the open. But we need 3 or more red bars. And BAC, who wants to trade BAC? Give me something that's a little more, it's got more energy to it. CPE, no pattern. This was a nice day trade yesterday in the room, in the strategic day trader room as a short. It was beautiful. MPW was a secondary today. Basing, but that's not a rising 20, and it's not underpriced either. And you have resistance above. So even though this is a base and does look higher, it's not that good, honestly. GE. This is a mini Climo, WEC, but we want them to be far away from the 20. That's not far from the 20. I mean, today it broke down off of the 20. So for climactics, you want to see multiple bars down in a row. This is going to be setting up as a breakdown. If you scan on a daily chart, you don't need to flag it, because once it sets up as a, I'm sorry, not a breakdown, sell setup. One more green bar, and it'll be a sell setup. If you scan on a daily basis, which I do, then you don't need to watch this because it's not ready yet. There's no pattern there, maybe starting in pullback, but would be a counter trend, so no play there. This is setting up as a breakout forward. Pretty bullish. Not exactly at the 20 MA, but this is bullish. Where's the entry? Over 1050 or something, over this bar's high. Where's the stop? Right here. So now, let's say I like this, which is okay. It's not great. Not bad though. I liked it. So what do I have to do? I'm going to flag it. I have to flag it, and I have to look at it on multiple time frames. And I have to figure out where the target is and how much do I have enough, and ask myself, do I have enough reward to risk? Does that make sense? It needs to be 2 to 1. What's the reward? Reward means the difference between your target and your entry. This would be the entry. Risk means the difference between your entry and your stop. So your target needs to be twice as big as your risk, as your stop. Does that make sense? So forward, okay, I went ahead and flagged. Apron, there was a gap today. Amazing short at the top, but it was threshold security, hard to borrow. Couldn't short it, would have been a great short. This had a nice kind of transition A, crazo, like a lot of the oil stocks. Okay, Snap is pulling back. You can watch it as a long. I don't like the fact that it got a doji bar right here. When you're looking for a pullback, you want fluidity. 1, 2, 3 or more. So here we have 1, and then that's a base breakdown on the hourly chart. So it's not as good, but it is at the rising 20. It is at support, and it is a strong stock. So it's not bad as a watch. We need a doji bar, probably, and then long above it. If we get that, then it would become an okay play. The SNAP. On WEC, how would you determine target? The 20 MA is the target. When you're going counter trend, if I was to play that, which one was it? WEC. You're asking, it would be here. That would be the target. But again, when it comes to climactics, you want 8 to 10% away from the 20. Is that 8%? That's $2. On a $45 stock, that's 3%. I mean, I'm sorry, that's 5%. So is that right? Is it $2? Let's say the 20 it's not at 47. So it's like 3% really. Okay, so that would be, when you're playing counter trend, always use the 20 MA as your target, because it makes sense. The 20 MA is where resistance is anyway. Does that make sense? All right. WEC, got it, not WFC, WEC. Let's take a look. Something like the WEC, somebody's asking about WEC. It has no target, because I can tell it's at all-time highs. Let's go to the weekly, all-time highs, monthly, all-time highs. So there is no target. I can't just randomly say, oh, $90, $100. That would be random. You can say it, but it would be random. So the best way is to just manage it and trail it. But it doesn't really have a target. Target means resistance, prior reference points. Does that make sense? So if it has no reference points to the left here, it means you just gotta trail it. Nice job if you're in it, by the way. So as I said, I go one by one, and then I flag the ones that look good. F and F looks higher. This is a buyout, probably. Yes, ACIA is a buyout. When they gap a huge amount and they don't move after the gap, it's usually a buyout. Okay, this was a buy setup a couple days ago. Would have been okay to play it as a swing 3 days ago. URI, right? Would have been okay. No pattern there. And then you just scan. We'll do another session on scanning. I don't want the video to be too long and get you all bored out of your minds with it, but we'll do another session on just scanning. Trox, TROX, that's a long right here, stop right here. You have this in the way and you have a square top, so it's not that great. People think, it's really easy to find the winners. It's not. You have to become really good at trading. That's a beauty. What's the name of the symbol? What's the name of the pattern that's setting up on SNH? Anybody? What's the name of the pattern that's possibly setting up on SNH? What's the name of the pattern? The name of the pattern is, it had a transition A, and this is kind of the transitionary buy setup. So it's a pullback with a transition A. So that's something I would watch. Where's the entry? Long over 855, stop 833, and can take target 1 of the prior top, which means you're not going to make much money, and maybe can look for target 2 up here. Does that make sense? So that's not a bad pattern. Just, flag it. That's not bad. I already scanned, like I said, I started the coaching at 4:30. So I already did some scanning. Let me show you. Let me just take down the chart so I can show you what I found. And then just show you what caught my attention. And I'm not done scanning. This is just, this is just to kind of show you what caught my attention. All right, so I have a bunch. Let me just see. ADPT is a new issue, but it's a breakout. So let's just ignore this. BHVN is a pullback, I think, on the weekly chart. It's a pullback on the weekly, pullback on the monthly, and then a breakout on the daily. It's not the best, but it's a breakout plus a 1, 2, 3. Long right here, stop under the red bars, low. BHVN, again, not the best. Dan, what's the name of the pattern on Dan that's forming? You tell me. What's the name of the pattern? Steven, once a week. My entire stock universe, once a week. Come on, guys. It's a pullback plus a breakout inside of the pullback. So it's a pullback pattern plus kind of a breakout. That's not bad. So Dan is on my list for tomorrow as a long over the base. Stop right here. Problem with that, Dan, it would need to make it all the way back up to the top to get 2 to 1. So it's not a lot of reward to risk. But I just want to show you what is going to be on my list for tomorrow. Ions is a monthly. So it transitioned on the daily. We have a 1, 2, 3, and it's a monthly buy setup. So that's not bad. It just triggered already, but it's not bad. I'm in the UHS as a long monthly buy setup. See it? 3 red bars to the rising 20 to support. It triggered already. It's I've been in it for a while. This is also an open play for strategic swing traders. It's in the newsletter. LK is a breakout plus a 1, 2, 3, but that's not very good, honestly. You know why? It has a lot of momentum because it's a new stock, but you have resistance here. So it's better to have gotten in it here, not up here. So this is not going to be a play for me tomorrow, but it's just to watch. MNST is a breakout on the daily chart. Now, I'm not going over these in great detail with the entry, the stop, the target, things like that. That you will get in the newsletter tomorrow at 8 a.m. Okay, for those that are subscribers. You'll get my picks with the entries and the stops and all of the whole 9 yards. Run is a breakout. Does that make sense? SIG is a transition A. I like it when the moving average is slightly more pointed up, like better curl, like the XON. Remember I showed you the XON? Much better. See this? Much better. But SIG is a transition A setting up over the base, stop under it, target up here. And then target 2 would be the 20 MA on the weekly chart. I mean, that's really the target. About 2170 or so. Target 2, but I would take target 1 before. So that's the, what was the symbol? SIG. So I'm just going one by one. SPWR is a daily buy setup. So I trade what I preach, right? Or I do what I preach. I told you, look for buy setups, look for breakouts. That's a nice looking buy setup. SPWR. STMP psychologically damaged on this because I was in it, got shaken out, and it didn't get back in. And it's stair-stepping higher, keeps breaking out. Every few days it breaks out, and I'm not in it. It looks really, really good, but it's super late also. I was in it, got shaken out. It looks higher though. TGTX, buy setup, deep pullback. If you check the hourly chart, we can check the hourly chart here also. Where's the hourly? I think we have to type in, where's the hourly? Here it is. It's not going to be ready. You need the 20 MA to be pointing up and below price. For example, Dan has a better hourly chart. See it? That's the hourly chart on Dan. So Dan is more ready, but the TGTX is very similar to Dan as a daily buy setup. That makes sense? TMHC, I don't remember what that looks like. It's a breakout, but extended. UEPS is too thin, but it's a breakout also over the base. It's a transition on the daily chart. Climb. Oh, not 4U's is a climactic buy setup. It's not very climactic, but it looks good on the hourly chart. So if we look at the hourly, is that the hourly? No. Let's go back to the daily. Here's the hourly. No. How do I get the hourly? There's a shortcut. Oh, control and 6. So control and 6. So the hourly is a breakout on the U. Long stop under the space. So it's a little aggressive because it's really just an hourly play rather than a daily. And VKTX already broke out today, but it's a transition A. Now the shorts, A and AB, is a breakdown. Now because the daily bar is already a big red bar, the truth is I'm not supposed to do it tomorrow. I'm supposed to wait for a narrow range bar, and then the day after that it'll be wonderful. It'll be phenomenal. Short, stop. Or short and stop right here. Could use the tight stop. Looks very, very good on all time frames. I mean the weekly, look at that weekly chart. Gorgeous. Monthly, beautiful. So I love it. But it already printed the big red bar and I'm not in it already. So it's a big stop. So I'd have to wait for a doji bar first. But I like it a lot. BCRX, base breakdown. I know it's a low price stock. I don't really care. Low priced stocks move a lot. So I don't care. CBay is exactly the same as the last one we looked at, the BCRX, but slightly better. Groupon is a monthly short. Did you know that Groupon is setting up as a core short? Groupon looks like a disaster is about to happen. Look at the large top. The bigger the top, the bigger the drop. And it's setting up as a monthly sell setup. So I'm watching the Groupon on a daily basis now because I'm looking to do it. If I decide to pull the trigger on it once it sets up nicely, I will send out an alert to SST members, Strategic Swing Trader members, okay? So if you're in the room in the program with me, you'll get an alert on it. Home as a breakdown under the base. Looks okay. What else? So I have a bunch. INFN is a breakdown if it negates today's bar and breaks under the base. It's at all-time lows. Looks great, but it's a big bar to negate. So I don't think this is going to happen tomorrow. It might happen the day after. INGN base breakdown, but a little extended. Looking for a sell setup. Was a really terrific gap on the daily. Looks good on the monthly also. Look at the big top, base breakdown to the 200, I would say. And so just under this bar's low, under 30.19 with a stop over 30.93 is a short. So I have a dozen plays or so. KHC is a weekly sell setup. How long did it take me to find these? Just 20 minutes between the close and the time I got on the mic. Just 20 minutes. I found all these plays. And now what I'm going to do, MNK is a breakdown. What I'm going to do is go over the list one more time and update the alert for tomorrow. And I'm showing, there's plenty more. I'm just showing you here a few. mRNA is a breakdown. Does that make sense? MYL, weekly sell setup. Gorgeous. Beautiful. Absolutely beautiful. PTLA, I think is a breakdown, but flat 20 on the daily, so I'm going to pass. RYAM is already going, but it's got a 1, 2, 3. Sale is going to be a weekly sell setup. It's not quite ready, but it looks beautiful on the weekly chart. That's the weekly time frame, but not quite ready on the daily. So this is just a watch, not ready for tomorrow. SLP is a possible climactic short. Up, and then 2 big green bars, and then lots of tails. Probably comes back down to 30. I don't really do the climactic shorts unless the stock is way up. I did the Tyson short. Look at this. Up, and then accelerated here. And it didn't even drop right away. Look at the weekly. Was up, 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 and then short. So I did that short. When it's very clear that it's a short, then that's when I go against the trend. But usually I don't really do it that easily. A THC is a sell setup because the trend is your friend. You want to really focus on playing with the trend, not against the trend. Yard is a sell setup, and ZFGN is a breakdown. So how many shorts did I just show you? You want to know how many? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. 20 shorts and probably about 15 longs that I was able to find in a matter of 20 minutes. How can you do that? How can you find this many in a matter of 20 minutes when you just use manual scanning? It's experience. I've been doing this for years and years and years, since 2005, right? And look at just think about the millions, tens of millions of charts that I looked at. I look at 5,000 charts a day almost, if you include the day trading also. So just after a while, it becomes a second language. You just recognize what's happening immediately. So now what do I do with my list? What I do is I look at it, and then out of the almost 40 symbols that I went over here, what I do is I pick the favorites. I pick the favorite 4 or 5, and then I make sure they have enough reward to risk, and then send them out in an email alert. Put my orders in the system the night before. I don't even have to wait until the morning. I put the orders in the night before, and then tomorrow if they trigger, great. If they don't, no problem. I look at them again, and if they still look good, then I keep the order in the system. If they don't look good, then I cancel it. Does that make sense? So I narrow it, even though I've already scanned and narrowed my list down to 40, I'm going to narrow it down to just a few. Sometimes 1, sometimes 2 per day, sometimes 3. So that's what I do. Now, again, I know this is just kind of an introductory thing. You're not going to be like, hopefully you learn the process at least, but you really need to do some practice on your own. And after a while, you'll get good at this. You'll get real good at it. Okay, question, Stephen. But you also scan daily. Is there something specific you do on the daily? So on the day, yes, I scan on the daily. I have a list that I generate on the weekly, every week, at the end of every week. And then I rescan that list every day after the close. Does that make sense? All right, James, you scan your universe daily for daily charts, end of day for weekly, and end of month for monthly. That is correct, James. That is absolutely correct. That's what I do. Okay. Will I look at EHTH, which has been pretty bullish? It's a pullback. The more candles at the top, the more bearish it is. So I see 3. That's not the worst, but preferable 1 or 2. Just like 1 or 2, not this many. And then the other thing is, it started from a wide range bar, so that's bad. And then the third thing is, it's pretty close to the top, so you're not going to have reward to risk unless you expect it to make new all-time highs or new highs on the daily chart. For a stock that's this bullish as the EHTH, I would expect it to just keep going. And so if you are, as long as you don't take it there, and you look for a bigger move, then you would be okay with taking the EHTH. But I think it's not the best play I've ever seen, because if you look at the weekly, it's way up there. So it might be a real reversal. Monthly, also way up, extended, almost climactic. But look, this is a power trend, very, very bullish. So it's okay to do it long right here, stop right here. But just don't take it there, because that's not enough reward to risk. But otherwise, it's not a bad play. Nancy, I can already tell you have a knack for finding really good charts. Okay. All right. Anything else? Anything else at all? When you set up your swing trades, the time in force, we should use daily. Yes, for swing trading, you should use daily as your main time frame. If the play looks good on the daily, that's when I look at it also on the hourly to make sure the hourly looks good and looks ready to go. And I also look at it on the weekly and the monthly, all at the same time. The charts are linked, so I look at them all at the same time. And I just want to make sure the weekly and the monthly are not going totally against the daily chart. Does that make sense? Because then that wouldn't be something I would want to do. All right, but but the first thing I do is I scan the daily chart, the daily time frame, and then I flag the plays, whatever I like. That's when I scan it again, look at it again on multiple time frames. All right. Can I show you that? Maybe on a different day, Stephen. I've been on the mic since for an hour and a half now, almost, right? Or more, actually more, an hour and 40 minutes. So maybe next week or the week after that, but we'll see. All right. Can I explain a buy stop order? You mean a stop limit order? Is that what you mean, Nancy? No, a buy stop order. I don't know what a buy stop order is. I mean, just a buy and a stop limit order, right? Is that what you mean? So you set, for example, if I were to buy this, here's what I would do. I would put an order to buy it at, see how it's at 89.90 is the high? I'd put it at 89, at 90.01. Give it that 10 extra cents because it's a wild stock. I know it, EHTH. So I'd put the order in the system at 90.01, and I would give it limit of 10 cents or so. So to 90.11. So that would be my stop limit order on EHTH. Okay. Right. So that's what I just said, Nancy. Does that make sense? No? Okay. Yes, that's a stop limit order. That's a stop, you called it a buy stop limit, but that's the same. All right, KDP for a swing. Let's take a look. Robbie, it is no good, my friend. It is at least not on the daily chart. Because look, as a buy setup, it happened here as a buy setup. It wasn't that good because it broke the 20, but it was at support. Okay, here it is. You got it, right? But it's gone. I mean, it failed. So on the daily chart, it's no good. Let's check on the weekly. Maybe on the weekly, it's really bullish. But also, we don't have 3 red bars in a row. So KDP is very hard, even on the weekly chart. And monthly has a breakout failure. The deep pullback on the daily caused the monthly to actually put in a breakout failure. So if it breaks under the base here, that will be a breakout failure. And I would expect it to pull back to about $25 right here. So KDP, no good. No good as a short. No good as a long. Remember, if we're looking long, you want a pullback to the rising 20 or a breakout off of it, like so. Does that make sense? Is that a pullback to the rising 20 or a breakout off of it? No. Is it a short, multiple red bars? No, we need multiple green bars to the declining 20 in order to play short. So that doesn't fit the criteria at all. Okay, so when you've always thought of stop limit as when you're selling. No, when you're selling, it's a limit order. It's not a stop limit. It's a limit. A stop limit is when the stock. So a stop limit, there's the stop, which is the trigger price, and the limit, which is your worst case scenario. It's the worst fill that you're telling the broker, fill me at this or not at all. So but when you're offering out, that's called a limit order. Right? When you're offering out. We can talk about this in more detail in the room tomorrow. So that I don't, so we can do it in the room tomorrow. Let's see, what time do you use for intraday trading when scanning? In the morning, I look for gaps. Dawn is asking about what time frame I use for intraday scanning. For intraday scanning in the morning, I look at the daily chart for gaps. Okay? And I don't do any scanning because I put the gaps on my thumbnail charts. So I do 1 minute until 10 o'clock and then 2 minutes between 10 to 10:30. At 10:30 I switch to 5-minute thumbnail charts until 11:30, and then I switch to 15-minute charts at 11:30 until the close, till the end of the day. So in the afternoon when I scan on 15-minute chart. So pre-market, I really scan daily, on the daily for gaps, looking for gaps. After the open, I'm looking at 1 minute until 10 o'clock, 2 minutes between 10 to 10:30, 5 minutes between 10:30 to 11:30, 11:30 till 4 o'clock. I scan the 15-minute charts. And in the afternoon, I run a kind of a long, tedious scan, and that's done on the 15-minute time frame. Done. All right. Okay, where do you get your gaps list from? I have a scanner similar to Trade Ideas, but it's not the same. Similar to Trade Ideas, a scanner. And then being a part of the room, you guys also, room members, put out any gaps that I might have missed. So that's how I come up with the most complete list. All right, and I have also the earnings list of the earnings, stocks reporting earnings on a watch list. So I just scan that in the morning, because that's where most of the gaps come from anyway, and make sure that I have every stock that's on that list that's gapping. Does that make sense? So I have a scanner, I have the room, and I have the earnings list. All right, and between all of that, I have a really good, I have the most complete gaps list. Run is a potential breakout. Yes, but I don't think it's based long enough. But it is a breakout. It's on fire. RUN looks good. Solar stocks are good. SPWR is another solar stock. I'm looking to play it long. Broke out on the monthly. So I like it as a long on the daily. So yes, Nancy. Sure, Robbie, you're most welcome. Okay, guys, thanks so much for sticking around. I hope you enjoyed today's lesson. For those on social media, again, please feel free to check out the links in the description. There is a link to the strategic day trader room, where I day trade every day with room members, hundreds of them. There's a link to the newsletter, the swing trading newsletter. If you want to swing trade and play earnings with me, swing overnight, then there's a link for that. There's a link for even the mentorship that I'm going to be hosting in New York in October, where you can actually trade with me in person for a whole week. So check out the links, and I hope you enjoyed today's lesson. Thanks so much, and I'll talk to you all next week. Room members, I'll talk to you tomorrow at 9 a.m. Be there bright and early. Good night, everybody.